Another Singapore blue chip swings to a loss in the second quarter, and it could lose a bid from state investor Temasek Holdings because of that. Keppel Corp, it says that it has failed to meet a precondition to a 4 billion Sing dollar takeover offer from Temasek. Temasek has declined to comment. Keppel, meanwhile, can't comment on the offer or how Temasek would act. Earlier, the company reported a loss of 697 million Sing dollars from a $153 million profit just a year ago. This comes from impairments and a weaker performance from its offshore and marine or O&M sector. The weak second quarter number dragged Keppel's first half into a loss of $537 million. Now, for a closer look, we're joined by Nirgunan Tiruchelvam. He's head of consumer equity with Tellimer Research. Good evening, Nirgunan. So this $4 billion question now. Will Temasek walk away from its takeover bid?
It's unclear whether that would take place, but there were certain stipulations in their bid which related to the net asset value and the profitability of the takeover target. And it appears that both these conditions have not been met in light of the recent results. Whether this would actually mean that the deal is dead in the water, so to speak, is unclear at this point. But you need to look at the fundamental value proposition in the oil rig space, as well as the debt issues that the industry is facing.
And what happens to Keppel Corp next, then, if Temasek was to walk away?
It's likely that they would be looking to do three things. Number one, they would be aggressively looking to cut debt. Number two, they would be looking to cut expenses because operationally they are facing a very adverse situation. And finally, they would need to take stock of their financial standing in light of the bid that they have received. They would need to assess their financial position versus the expectations that Temasek has.
Nirgunan, Keppel's non-O&M sectors, they're still in the black, even with lower profits. But what's the outlook for these segments for the company now?
Those segments are relatively sanguine. They're on a sounder footing. But the core oil rig business is facing, let's say, an existentialist issue right now because trade has ground to a halt. Oil prices are very volatile, and the very businesses that keep them afloat in good times are under serious threat. To add to this, there are debt issues as well as operating expenses, which are excessive given the level of business. So these are some of the issues that they need to tackle in a juncture of this nature.
Nirgunan, you sort of alluded to it there. Offshore marine industry has been heavily hit by the pandemic. What's your outlook ahead? Do you have a time frame in mind for recovery?
Well, there are a couple of things that one need to watch out for in the industry. Number one, the level of debt is so high in many companies that they need to be assessing their capital position. They need to be disposing of assets and buttressing their balance sheets. The second is the prospect of mergers across the sector. There could be consolidation where a number of oil rig players, oil and gas players, would be looking to merge to reduce their difficulty in an adverse environment.
Many thanks for your thoughts this evening. Nirgunan Tiruchelvam from Tellimer Research.